In my last video that I created exactly 2 weeks ago, I talked about how 2025 was still a buy the dip opportunity and that the S&P 500 was still holding the weekly 100 moving average. It tried to tag the 200, but it couldn't really tag it, and that the burden of proof for more downside was on the bears, right? Because naturally the market wants to go up. And so that's exactly what we did. Over the period of about 3, 4 weeks, we held the 100 moving average. And now we went from 508 at the lows to almost 587. That's an 80 point S&P 500 move in about 2, 3 weeks. And so when the market was down here and when I made the video, if you guys listened, then right now you'd be a happy camper. I know I am. I profited lots on this move up. And so the question now becomes, where do we go from here? So I'm going to make this video purely from a technical standpoint because I know lots can move the market, right? Trump can tweet, we could get inflation data, a deal could fall apart, or we could make a new deal, whatever it could be, right? But from a purely technical standpoint, this is what I see. Now, if you notice, this is the 200 moving average on the 1 hour time frame, and you can see that every single time the market strays far away from this moving average, it tries to come back towards it, whether it be, down below at oversold levels and trying to rebound, or overbought levels and trying to, cool off. Every single time it tries to kind of tag this line, right, over a period of time. So the market always likes to, come back to its moving averages. And that's exactly what we observed in the April lows when Trump announced those reciprocal tariffs. You could see that the market was hugging this moving average for quite some time, tagging it, and then wham, right? We had a pretty significant downside move. And admittedly, it was pretty oversold. A lot of people were, long-term investors especially, they were looking at this as a sweet deal. And we came back to where exactly the 200 moving average. And so now you can see that the trend has kind of shifted a little bit because since the start of or late February, we broke below this line, held below it, right, for the majority of February, March, and even April. But now we had a decisive break over the 200 moving average, and we are extremely far, away from this line. You can see that this line is sitting around 542, but we are sitting at 587 currently. That's not to say that the market is going to tank immediately, right? Because anything can happen, but it's more likely, I would say it's quite probable that the market comes down to at least hug this moving average and give the moving average some time to kind of curl up before the market starts decisively moving higher again. So that's what I see for the market going forward. And you can see that the trend has changed. The market is still on the S&P 500. The market is still holding the 100 moving average well. We're getting an MACD cross, a bullish MACD cross on the weekly. So, if these ads can just, okay, cool. Bullish MACD cross on the weekly. So a lot of things are changing. And, if Trump secures many deals with many countries, then we could see the market move even higher, despite calls for recession, slowing economy, things like that. All this is going to come into play, I believe, in the back half of the year. But for now, the trend has shifted and we're trying to form structure, a bullish structure to kind of carry the S&P 500 and the overall market higher. So hope you guys enjoyed this video. That's what I see from the market going forward. If you guys enjoy these updates, please give me a subscribe, follow, and Don't forget to check out my Toast Beans app on the iOS App Store. I also post daily updates on the S&P 500 and many individual stocks out there for investors and casual investors, traders, and yeah, hope you guys enjoy this video, and I will see you guys soon. Thanks.